Okay,
Hello,
Peter
John.
Schultz. Good morning.
Could your next speaker possibly be Peter Schultz? Is that possible?
If I had to choose among the many, that would be my number one pick.
Well, listen, it's great to be here. I appreciate you having me on. Is this a good time to do a little screen share?
Absolutely. You go ahead and get your screen share. Peter is the founder and CEO of Wealth Builder Publishing and chief strategist of The Winning Secret. Since 1996, he has been showing some self-directed investors how to trade successfully, becoming a nationally recognized speaker and the author of books like The Winning Secret. His personal mission is to help people reach a place where their passive income exceeds their expenses. Please welcome Peter Schultz for his presentation, How to Create an Automatic Money Machine. I like the idea.
Thank you, John. Listen, somebody on your end needs to give me the ability to screen share, and so I just made a request.
Okay, we're all
Uh,
listening in.
I already approved your request.
Yeah,
Oh, okay. All right. Looks like I got some choices. Good Lord, look at how many screens are open here. What's going on?
yeah. You get screen overload sometimes.
Yes, that can happen. There's so many tabs. All right. And
We
we're
are
going to go
seeing your screen.
good, fabulous. So, the name of this presentation is How to Create a True Automatic Money Machine Set to Profit No Matter What Kind of Luck You've Had in the Past. So, that's sort of a great goal for all of us. That sounds good. So, let's see if we can turn that into a little bit of a reality. And my name is Peter Schultz. I've been trading every day for over 30 years, and I'm the chief strategist to the Winning Secret. And that's a way to create generous weekly income from a relatively small. And so in this presentation, you're going to see the strategy that's worked the absolute best over the last 20 years. And we have a wonderful track record to prove it. And we're sort of morphing that into a strategy that's going to be the best for the future. And so this is, I think, going to be a little bit interesting for you, even if you've been trading a long time and you feel like you've kind of seen everything. I hope I'm going to show you some things that are a little bit new today. So there are two problems for most people when they try and make consistent profits in the market is they don't trade with a true advantage, a built-in mathematical edge, and they're subject to their own bias and emotions. And so how can we overcome these two universal problems? And it's kind of funny. When I first started trading many, many years ago, and I got exposed to options, a horrible thing happened to me. And that is I won on my first three options trades. And I thought that my biggest problem in life was going to be what color my Mercedes Benz was going to be. And then a strange thing happened is I wiped out my entire account. And back in those days, I was kind of young and maybe a little bit overconfident. And I thought that my big edge in trading was how quick I was and how smart I was. And if you've traded any length of time at all, you kind of realize that the market is nothing if not a humbling experience. And maybe that's good for us because it kind of forces you to go back to the drawing board and think a little bit. So, and we're also very much subject to our own biases and emotions. So, how can we overcome these two universal problems? And the traditional approach is through fundamental and technical analysis, and especially technical analysis, looking at charts for short-term trading opportunities and good setups. And this is actually a really great way to increase your odds. And if you've kind of studied this, and I think a lot of the people and folks that come to webinars and listen to traders and try and learn, one of the first things you learn about is technical analysis and different patterns that increase your probability of winning. And they really do. And different patterns actually have probabilities attached to them. So if you're doing that with your trading, that's a great way to add a true probability advantage to your trading. But then, even then, you can still lose and too much and too often. And one of the most frustrating things for me, and I don't know if this has ever happened to you, is you put all this research into a trade and you literally find the perfect setup. This is something that could be in a textbook. you're thinking, all of your work and research has paid off. You have the perfect chart pattern, you have the perfect fundamentals, you have the perfect market, everything's lined up. And you make a bet on that trade, and maybe you even go in a little bit more than you normally do because it's such a great setup. And then the whole thing reverses on you and you end up losing. This is a cause for a lot of frustration, and you kind of beat your head on the wall and you wonder, what else could I be doing here? And that's really normal. So, what's the solution? What can we do to sort of improve our odds and make things better? And the trick to making money dependably over the long run is to use a strategy that stacks the deck overwhelmingly in your favor on every trade automatically. So you don't have to be so great because the strategy is great. And the way we'll do that is to use options because of their built-in probabilities. And by switching to being a seller most of the time and a buyer some of the time, you'll trade with the highest odds on the probability curve, and you'll instantly stack the deck by over 80% on every trade, completely removing yourself from the equation. Now, for some of you veteran traders out there, and if you've traded options for a while, some of what I'm going to go over is going to sound familiar to you, but I really, really encourage you not to dismiss it on that basis. Like, don't say, oh, I've heard this before. I know all about this. I'm going to tune out, because I've got some things here that are new, that are worth sticking around for. So here's the biggest factors separating stock trading from options trading is options have a limited lifespan. They expire, and if they're out of the money at expiration, they expire worthless. So when you're an options buyer, time decay works against you, but when you're an options seller, time decay works for you. And I'm going to just grab my little pen here and kind of make some notes here. So I've studied a lot about time decay and kind of how it works. And the sweet spot we find for time decay is from about 14 days out to about 10 days out. And if the premiums allow it, we typically do 10 days. And the reason that we love selling options 10 days out, and keep in mind that there's a weekend in there, so you take 2 days out for the weekend, and you really only have market exposure for about 8 days. And so what happens is every single increment, every single day, you have time decay. So all other things being equal, this time decay really works in your favor. And it's this huge kind of an extra lever that really stacks the probability in your favor. So all other things being equal, you win. And what I discovered is that's a true mathematical advantage. So it's great to be good looking, it's great to be smart, it's great to be really quick on your mouse, and it's great to be able to rattle off, the 5 top chart patterns or whatever it is. But what's really nice is when you have a true mathematical advantage on your side. And when you do, it really doesn't matter how tall or short you are or what side of the tracks you grew up on. That mathematical advantage is going to work for you no matter what. And this is a way we just made a tremendous amount of money over the years. And I started doing this. We started our advisory back in 1999. And I still have people that are with me, and they absolutely love it. And it's not because they haven't figured out how to do this on their own. It's because I do so much of the work already and give really great setups, and they like having that advantage, that time advantage. So just to take a look at kind of what happens here, this is a great example. Now, the market's been going up pretty dramatically over the last several months, especially since May 30th. And today we're actually seeing the first real cracks. And I think we're going to see a turnaround. I think it's time for a really big retracement. So if you've been bullish and if you made a lot of money, I take my hat off to you. That's absolutely wonderful. But it might be time to start looking a little bit at the downside. So here's a trade that we did not too long ago. And this is kind of standard technical analysis. And I like technical analysis to be really simple. For one reason, it's easy for us to understand. And the other reason is technical analysis is kind of like a voting machine. So if a bunch of people see the same chart pattern and they see the same thing, and it's a really commonly known pattern, excuse me, they tend to act on it and it tends to play out. So the trick is to sell your spread in the opposite direction of the underlying to create an overwhelming probability of winning. So that 80% probability that we just talked about, that's completely in a vacuum. That's just based on the options trading formula, the Black-Scholes model, on the percentage probability that that stock is going to be out of the money, or the option is going to be out of the money when expiration rolls around. But if we throw in a little bit of technical analysis and the overall direction of the market, it really increases our odds. So what you're seeing here is the actual commentary from my subscription service. So I have a subscription service. I think just about everybody does, that you'll be listening to today. And that comes out, it's a really comprehensive update, and it comes out on Tuesday evenings so we can place our trades. We have plenty of time to place our trades the next day on Wednesday morning. And so this is the commentary. The rut just broke above horizontal resistance in a big decisive move that foretells another strong leg to the upside. We'll be selling below both uptrend. So here's our uptrend. Below both uptrend and a horizontal support. Here's our horizontal support for a high probability outcome. And so that's what we're doing to increase our odds. So we're not just going with the mathematic probabilities of the formula, and I'm going to show you how to see those at a glance, but we're also putting direction and fundamentals in our favor. And most of all, the technicals, the chart, which way is this thing heading, which is probably very much like what you're doing now, but the time decay and the direction of the stock just adds a really extra big component of probability on your side. So in no circumstance will you win on every trade. We wouldn't expect that. If you ever had a situation where you're winning on every trade, you kind of wonder who's on the other side of that trade. If you never let the other guy have a chance to win, it's not much of a game, and you probably nobody will want to play with you. In other words, there won't be any opportunity there. But if the other guy has a chance to win, even if it's a small chance, you can win most of the time and keep playing the game indefinitely. So how much money can we make, and in how much time? So it broke above and it continued in this, just like you would expect it to. And so this diminishes, and the value decreases of what you sold. So basically what you do is when you put these trades on, when you sell a credit spread, you get a credit in your account. You get your profit immediately. You get it up front. And you do that by, in this case, selling this put, and that's a sell, and you buy this put, and what you're selling is closer to the underlying than what you're buying. So you get a fairly great credit when you sell. You get a fairly big amount of money. It costs you a smaller amount of money when you go to buy, and this creates a credit in your account. And that's how we make money. So no rate cuts will hammer the housing sector. So that's kind of what we're seeing today. And by association, the home improvement stocks. As you can see, that's Lowe's, has been falling hard and just broke below critical horizontal support. This stock is heading lower and will be selling well above both downtrend and horizontal support. So that's what we try to do, is get on the right side of two levels of resistance or support. And this gives you a really good idea of what we're shooting for. So the spread here is $2.50. That's the difference. We're selling the 250 call, and we're buying the 252.50 call. So that's a 250 spread, and we're collecting a 50-cent credit. That gives us a $2 worth of risk. And if we make 50 cents on $2, that turns into a 25% return. Keep something in mind here. We're doing 2 of these a week. So we have an expiration. We have a couple expirations every Friday. So we overlap these. They expire the following Friday, but because we're overlapping them, we have 2 expirations every Friday. If you get out your calculator, and I'm going to actually give you a little help with this here in a minute, but if you get out your calculator and you figured a 25% return every 10 days and it's cumulative, it's going to kind of blow your mind what that turns into. And the reason I feel like I have to mention this is because when people go to trade options, a lot of the time they really get excited and they're thinking in terms of hitting it out of the park and making 100% return or a 200% return or a 300% return. And it's true, those returns are possible. And that's how I first approached options when I first started 30 years ago, and I had these big stars in my eyes. And after losing and blowing up my account like 3 different times and just beating my head on the wall and feeling humiliated and stupid and everything else, I finally figured out that what you should really be thinking about and what the best traders always think about is not how much you can win, but what is your probability of winning? What is your probability of winning? And those home run kind of situations usually typically only have maybe a 20% probability of winning. So you have to go through a lot of losses, devastating losses, both financially and emotionally, to get to those big winners. And after doing this for many years, I decided it just wasn't worth it. I would rather get in a habit of making money consistently over and over and over again and just seeing the cash piling up in your account. And I'm going to show you how powerful this math is if you just stick to it and be consistent. So what we talked about here is the $2 of risk, and I think you see that, and the possibility of a 25% return. Now, this can be greater, can be a little bit less. Occasionally we go for a 21, 22, 23% return, but most of the time we stick to that 25%, and in many cases we can make more. So here's an example of Tesla. It has been in a big downtrend since actually December. And kind of, everybody talks about the Mag 7, and Tesla's a Mag 7 stock, but really hasn't been doing that well. And so we decided to sell a call spread because Tesla is so volatile. We were able to sell way out of the money. You can see how far out of the money this is and still collect a really great credit. So the commentary here is Tesla's still in a protracted downtrend, but with a little luck, we'll see the stock rebound up to downtrend resistance to get a really good fill on a strike well above its projected path. So Tesla did exactly that. As you can see, right after what happened here is Tesla bounced up. It did get down to downtrend resistance, and we got more than our 50 cents. We got 61 cents. Every extra penny adds this tremendous amount to your return because it also takes away from your risk. So in this case, we had risk because we got 61 cents. We had risk of $1.89. 61 cents is our potential profit. As you can see, the thing expired no problem. It never even bounced above downtrend resistance, and we ended up with a 32% return. And this happens fairly frequently because, the market's volatile. It bounces around, and in many cases, it bounces in our favor. This was a really interesting trade. These don't come along very often. So this is Carr, this is Avis, and they have one of the most terrible business models in the world. I don't think they're going to persist. Now we have Turo around, so people can just rent cars from each other. It's kind of the Airbnb of car rental. It's kind of all I use anymore. I got really tired of all the rigmarole and extra fees and hassles with the standard car rental companies. So I just use Turo all the time now. And even before Turo, cars, the car rental companies like Hertz and Avis, they buy the cars brand new. The cars have this huge depreciation over 3 years, and then they have to sell the car. It's this kind of big money losing machine. I don't think Avis budget rental car has had a positive cash flow quarter in, I don't know, like 8, 9 quarters, something like that. So what happened, and this goes back to, this is very recent that this happened. You can see that this big jump higher just took place towards the end of March, and then it started going up exponentially. This should be a familiar story to anybody that was involved in the meme stocks back in 2021. What happened is a lot of the really big hedge funds were short Avis budget, and their ticker is CAR. And so there was an opportunity there to really put it to the short sellers. So there was a hedge fund that owned a tremendous number of car shares, about like half of the available float. And I think they kind of colluded a little bit, and they made their shares not borrowable, so you couldn't borrow against them to margin. Then they went into the open market and started buying shares. They created a short squeeze, and sure enough, this thing just went up exponentially. Well, what most traders do when they see this is they say, well, I want to jump on board that rocket ship and really make a bunch of money. The problem with these things is you never know when they're going to turn around. So what we did is we went just slightly out of the money, and we sold, I think it was like the 7:15 call, and bought like the 7:20 call, something like that. And we collected a really nice big fat credit because there's so much volatility here. In fact, we collected on this. Let me get this right here. I think it was a $5 spread, and we collected $2.50. So if we made money on this, it was going to be a 100% return. And what I told all my subscribers is don't put a stop on this. This can easily go above our sold strike, so we're not going to stop out. And sure enough, it did. The very next day, it peaked up here, up at like 800 something, and then it very quickly turned around. And what I tell everybody is whenever you see a chart going exponential like this, what I tell people is they all turn into Mount Fuji's. So it comes down at the exact same pace that it went up, and it creates this like perfect mountain peak, and it's almost guaranteed. I have never seen an exponential gain in either an index or in an individual stock where it didn't turn out that way. When the thing turns around and loses momentum, traders want to get out just as fast as they got in, if not faster. And here's what ends up happening. Actually, in this case, it was faster. Look at what happened when it peaked and then came down. It came down. It was over $800, and by the end of the day, it closed around $425. Opened up the next day, gapped down, and went down even more. And CAR is demonstrating a classic example of a short squeeze situation that never lasts. We'll be selling just above its current price with over 2 weeks of time for a high probability outcome on a very juicy spread. So the truth of the matter is, I wish I really was clairvoyant, but I didn't know when this thing was going to turn around. Sometimes the insanity can last longer than you think it's going to. And so we bought a little extra time on this. As you can see, we bought like a couple of weeks of time where normally we would just do 10 days. But as it turned out, the thing turned around the very next day. And what did we make? We made on this one, we made a 100% return. And what was crazy about this is we couldn't close the trade before expiration because the bid-ask spreads were so wide. So sometimes the market makers get really jiggy with it. And even though something's way, way out of the money, they still won't let you close for any kind of a decent amount of money. So when that's the case, we say, fine, if that's the game that you want to play, we'll just let it go all the way to expiration. So we let it go the entire time. And at expiration, we made 100%. This is super unusual. And the only reason that I'm showing you this is to show you the possibilities here. If you buy an option, in this case in particular, you have very little chance to win. You can make a lot of money if your timing happens to be perfect, but chances are it's going to reverse and you're going to get burned. Well, when this happens and you're a seller, it just completely all works out in your favor. And as a seller, it's been so great to do this over the years. One time, a few years ago, when the Ukraine war broke out, about 3 years ago, I decided that Russian assets were really going to suffer. And there was a Russian ETF, and it was optionable. So I sold a call spread against it, and I collected a really good credit, thinking that this Russian ETF was going to go down in price based on the war and the sentiment around Russia and all those other things. But actually what happened is the very next day, they halted trading on this Russian ETF altogether. The powers that be, the US government, through the SEC, decided that they don't even want anybody trading in Russian assets, and Russia should just be ousted and kicked out of our exchanges completely, and they just completely stopped any trading on that asset. Well, here's the interesting thing. I'd already collected my money. So somebody sold me those options And that's the person that got burned. They're the one that has the exposure. And when they stopped trading on that asset, I just got to keep the premium that was collected. And I don't think that's fair. I don't think that's a fair fight. But I really was glad that I was on the right side of that. And by being a seller, you're on the right side. And that's actually happened several times. Back in 2021, when these meme stocks were all taking off, I remember I sold a credit spread on one of them. I don't know if it was AMC or which one it was, but the thing just kept on going and I was totally underwater. And I thought, it doesn't matter. I can just wait this out. Occasionally, you run the risk of the stock being put to you early. But once again, there was too much froth in that market. And the powers that be, they came in and they halted any options trading. You could still buy and sell the stock, but you couldn't trade options on it. So nobody could put the stock to me. And the thing did collapse before expiration. So I ended up making a ton of money on that. And the point of all of this is when you're a seller and you collect your profit up front, it's up to the market to take it away from you. And I love this old expression that possession is 9/10 of the law. You got that credit, that money is sitting in your account. And now some situation or setup or circumstance, well, first of all, I mean, just to be clear, nobody can ever take that premium away from you. You are getting paid that to take this risk. So that's yours forever. Of course, it's possible to lose on these trades, and I'll show you how that can happen, but it is so nice to get this paid up front. So this is a very recent trade. We're actually still in it. This is a trade we just put on Wednesday, just 2 days ago. And it's AMD has been consolidating some impressive gains over the past week, but now it looks ready to launch higher. And we'll be selling below both horizontal and uptrend support on a stock clearly wanting to climb. And so we have this very well-defined uptrend here. And AMD would have to break this uptrend in order for us to lose on this trade. And that could happen. I mean, with the news that just came out today, AMD is down this morning, and we could certainly lose on this trade. But chances are good AMD will rebound. They've got really, really good fundamentals, great metrics, tremendous demand for their stock. They're kind of like the mini NVIDIA. They've got GPUs that are very effective, just like NVIDIA does. And a lot of people have been buying their stock, as you can see from this tremendous uptrend. It's actually steeper than that, that we saw that started back in the beginning of April. So we'll see what happens here. So we not only have time decay and probability working for us, but direction and momentum as well. You sell the close option and buy the farther option to hedge, immediately creating a credit in your account, and you get paid the moment you put on the trade. So I think we've kind of got a good handle on the advantages here. And let's see. So one of the reasons this is so effective, and I think this is a good demonstration of how this works so well and why it works so well, is there's only 5 things that a stock can do. And you'll win on 4 or 5 of them. So here's an example right here. So we put on this trade when AMD was right around here, and we sold this spread. And so if there's only 5 things that the stock can do after we put on this trade, if it shoots straight up, which it kind of did right here, it gapped up the next day. If it shoots straight up and stays straight up and maintains this direction, you will win on the trade. If it goes up, kind of goes up, so maybe it just follows its trend line and keeps doing that, you're going to win on this trade. Now, maybe it loses momentum, and you can see this today, this morning, and you can see it in yesterday's trading, and maybe this thing only goes sideways, and that's all we can manage, and it goes sideways, you win on the trade, and you win the maximum amount. You win just as much as if it would have gone straight up. Here's what's interesting. If it goes down, so the trade goes against you, but it doesn't go far enough to hit your sold strike, you still win on the trade. The only way you can lose on this thing is if the stock goes straight down. So how much can you lose? So what we said on this one is, say we collected 50 cents, which is what we did on this trade, and this happens to be a 250 spread. So you subtract the 250, or you subtract the 50 cents from the 250, and that gives you a $2 potential loss. Here's what's interesting, and here's what makes this so good and really makes a huge difference. So option theory tells us that if this thing does fall out of bed and it goes down, and we set a stop right here at our sold strike. So if this stock goes down and it hits our sold strike and we get out of the trade, options theory tells us that it won't cost us the whole distance between these two strikes like it would here. So we really don't have this whole 250 at risk or even the whole $2. If this goes down, it hits our sold strike and we close it, options theory tells us that the cost to close is half the distance of the spread. So in other words, we divide that by 2, and what we get is a cost of 125. Theoretically, and that's typically how this works, options theory really does play out most of the time. So it only costs us to close $1.25. But keep in mind that we collected 50 cents on this. So our real loss is only 25 cents, or excuse me, 75 cents. But we collected the 50, we take it from the $1.25, and we have a 75-cent loss. So what that tells us is if we have the possibility of making 50 cents and we have the possibility of losing 75 cents, it only takes us 1.5 times to make up for a loss. And yet we have an 80% chance of winning on this trade. So if you figured out that math, what you'll figure out is most of the time you're going to win. And it's not because we're so good or we're so fantastic or we're so clever. It's because the strategy is. So if you just take this simple math and put it in your favor, and you add momentum and direction and the technical analysis you already know is perfect, you're just going to win the majority of the time. And the cool thing about that is you get used to winning, you start to see money build up in your account, and it gives you a heck of a lot of confidence that gets devastated with a few major losses. And that just doesn't happen here. We don't allow it to happen. So what do you look for a great spread? You look for weekly options expirations. And so we want to really be able to get on the perfect point on that time decay curve. So this thing, it's decaying at a rapid speed, and we know what's happening, and we can really do that. We can really position ourselves when a stock has weekly options expirations. We want tight spreads. We don't want big $10 spreads. $5 is good for something like the S&P 500. 250 is probably my favorite, probably my go-to. And then some stocks that are really heavily traded, the options are really heavily traded, they actually have $1 strikes. So when that happens, I typically do a $2 spread. And that gives us a really decent amount of money. All you need to do is collect 40 cents on that. You have your 25% return. It's a really nice way to go. So we kind of stick in this $2.50, $1 area where we can. Something like the SPX that is really expensive, we're going to do a $5 spread. We want to have narrow bid-ask spreads, and that's usually a function of how much liquidity there is with the options on the underlying. So something that gets traded a lot, think the S&P 500 has, or the XPX has really narrow bid-ask spreads, and that's slippage. So your two sources of slippage are commissions, and some brokers even have commission-free trading now. And your other source of slippage is the bid-ask spread. We want that as narrow as possible, just a few pennies if possible. I've traded options or tried to trade options where the bid is 50 cents and the ask is $1. You've probably seen this if you've traded options before. In other words, the option literally has to double in order for you to break even. And that is not the equation that we want. So I usually don't like it if you want it in percentage terms. I really don't like it if the bid-ask spread is more than 10% of the options price. So you want your options heading, you want to actually sell in the opposite direction of where the stock or the underlying is headed. But what you really want is for that stock to be heading in the same direction as the overall market. There is contrary plays that you can do sometimes, but they're generally not worth it. They say about 70% of stocks trade in the overall direction of the market. And so why not just have as much momentum, as much tailwind in your favor as you possibly can? And we want a credit that yields at least 25%. And as we've seen with CAR and some other examples, maybe more. So if you're out there looking on your own, this is how you set up a really efficient credit spread that has a really good chance of you making money. So how much can you make and how much can you lose? And so, oh, this is another trade we actually have going on right now. This is expiring today. And with the market down, Home Depot is down. We've got another instance of a long downtrend here while the rest of the market was going up. So this is a really strong sign of relative weakness. This is what you want when you're selling call spreads. And this is a 250 spread, and this is probably going to expire worthless. So in this case, like we talked about, and we just went over this math a little while ago, in this case, our potential is to make 25%. I think we're going to do that or better today. I got to go back and take a look at our credit. And your potential loss on this, if we set a stop here at our sold strike, is that 75 cents, which is pretty easy to make up when you set a stop. So as you can see, this came close. We had a couple of candles here that came close to our underline, never quite touched it. The overall trend took over. Once again, Home Depot is related to the home building sector, the home remodeling sector. They're the largest retailer in the country for building supplies and remodel supplies. And of course, they've been going down with the potential of interest rates going higher. I think we're all taking a look at these interest or the inflation data that's coming out, and we're pretty convinced that the Fed is going to have to raise interest rates at some point this year. I think it's going to have a bit of a devastating effect on the economy, especially as much debt is out there. It's going to have a devastating effect, and it already has, on the real estate market. This is a good time to start lining up your bearish trades. And this is very, very easy to do with call spreads. You have such an incredible opportunity to win, such an incredible probability. So we target 25% per trade. Excuse me, but what is an attainable return you can actually expect over time? It would be great if you just made a consistent 25% all the time. That's pretty unrealistic. We do something, we hold back part of our account for cash so that we can roll trades to make a bad trade better. There's also obviously going to be losses, those times that you lose. And we showed what that potential is, that 75 cents versus 25 cents or 50 cents coming in. There's going to be buybacks where we buy back a position and we roll it out, give us a little bit more time to be right. So realistically, can you make 20%? Can you make 15%? Typically, I think what we found and our records show over time is we're making about 10%, but we're doing this about every 10 days. So you can imagine how quickly your account can build. I want to set expectations that are so low here that I know anybody can attain it. And so what we're going to talk about is just a 5% return. So keep in mind, you're winning 25% on a winning trade, and you have over an 80% chance of winning every time you place a trade instantly and automatically. Let's cut that all the way down to 5%. That's an amount I know anyone can make. As the key is you're turning your money every 10 days, and we're going to actually lengthen that out to make this worse and make it every 2 weeks. So let's see what that looks like starting with just a $10,000 account. And this is going to kind of blow your mind, especially if you think 5% is kind of a paltry amount of money. Like, why are we even wasting our time for that? With that, let's see what that turns into. So this is the power of compounding. So after 2 years, 10,000 has grown into 104,000, and you're bringing in over 10,000 a month. And if you're looking at this right now and you're thinking to yourself, you know, Peter, this is a great little graph you've put together, but you know what? Life never works out that way. We get some surprise out of the Fed, or all of a sudden there's a surprise war in the Middle East. You know, the market's just not that predictable. And I don't believe this chart is actually going to play out that way. And you know what? I agree with you 100%. Nothing in real life is this uniform. But what does happen is the probabilities really do play out over time. So what this chart really looks like in the real world is something like this. You go up, you go down, you go up, you go down. It's kind of a jagged line, but it follows what's going on and the probabilities. They play out over the long term, so your account really does grow. And I'll tell you where everybody gets hung up on this, and it's the most common thing in the world. If you've already sold credit spreads yourself for any length of time, you'll know that this is the case. And I've seen it happen so many times. What happens with credit spreads and the threat with credit spreads, and the reason some people don't experience this kind of growth is because you win so much, you get overconfident. And you start going, if I was allocating $500 to a trade, how much better it would be if I allocated $1,000 to a trade. Now, that's actually good thinking as long as it's a standard set percentage of your account. So as your account goes up, you're allocating a bigger amount of money, but it's the same percentage of your account. So the same amount is at risk every time. And let's say you're going to do 10% of your account per trade, whatever it is for the amount of money that you have allocated to this strategy. Where I've seen people screw up and where I've seen them get in trouble is they go, look, if 10% of my account was good, 20% of my account's going to be great, and 30% of my account's going to be fantastic. And the way that the world works and the way that the marketing or the trading gods love to make fun of us is on that one can't miss trade, the one that absolutely cannot lose, is you just push all your chips into the middle of the table and you go, I am going to make so much freaking money. I'm going to be such an incredible hero to my wife, to my family, and everybody I know. I'm going to just make a fortune on this one trade. And that's the one trade that does the impossible statistically and ends up being a loser. And I've seen this happen over and over and over where people will make money and make money and make money, and they build up their account and they go, I've got this. I'm an options god. I'm absolutely infallible. And they end up putting too much money on one trade. And instead of having this kind of jagged line that goes up, you have one of these where it goes way down, and it takes a long time to climb out of that hole. If you've been trading any length of time, I hope you can relate to what I'm saying. This is just, don't feel bad about it. It's just absolute standard human nature. We all do this kind of stuff. We kick ourselves around the block, and there's a really, really easy strategy to keep that from happening. And that is to keep the percentage that you're allocating on each trade to a standard percentage and don't deviate from that. And don't put yourself in a position where you can lose the entire farm on one turn of a card. And I know when you're sitting here listening to this, you're saying, Peter, I'm not stupid. I would never do that. I know in the coolness of this webinar right now, I know you never would. But in the heat of the battle, when you're really feeling infallible and you think you have an absolute golden lock, believe me, it can happen. But if you stick to the rules and you stick to the probabilities, this chart, it's not going to be as smooth as this. It's going to be this kind of jagged upward line, but you can make this chart a reality. And you know who loves this strategy more than anybody is engineers, math professors, people that work with numbers, accountants, bookkeepers. And the reason is they understand it. They understand the probabilities. They understand the power of probabilities. And that's why they love it. And like I say, I've got people that have been with me for years and years and years. They've turned into old friends, and it's really nice to have that consistency. So you can try the strategy out for yourself, starting with as little as $200 per trade. When you have that risk there, they hold that margin in your account. So that's not available until you either close the trade or it expires. And occasionally we do close trades early. If we have some bullish trades on right now, we might be closing those early today just to get out of the way of any falling anvils that might be out there. But you can try this yourself. You've actually learned enough right here that you probably have a pretty good chance of going out there and doing this on your own. There's just one problem, and that is if you don't do well right off the bat, you might get discouraged and quit. And that would be a shame because this really is the best way to trade because of your high likelihood of winning, the hands-free nature of the trading, You don't do much once you put on the trade and you set that stop. It's just all kind of automatic. You can go have lunch. You can go on a camping trip. And number three is the tremendous compounded returns over time. There's so much power in this. And so to make sure you start off profitably and stay that way, I put together an educational package that's the best anywhere for this strategy. And that's at a fraction of the $2,500 sales price we used to charge. And I used to sell this. I know you'll find this kind of maybe amusing, but I used to sell this on cruise ships. And people were in a really good mood. They're on vacation and they want to do something kind of cool and fun. And I would teach this. And because of the environment and the atmosphere and the clientele, it was $2,500 for the package. The crazy thing is I still get emails from people today that are still doing this strategy, still loving it, and they don't feel bad about what they paid, even though I charge less today, and the package is better today because they've gotten years and years and years of cash flow out of this deal for a relatively small amount of money. So the package is called The Winning Secret, and it includes how to trade credit spreads for fun and profit. And it shows you step by step how credit spreads work, why they work so well, and why they can work for you. And making money should be fun. I always thought it was amazing when teachers could make two of the most fascinating subjects in the world boring. And those two subjects for me are finance and sex education. And I think it's a real talent to make those two subjects boring when they're so darn exciting. So if we're going to learn how to make money with a strategy that actually works and puts money in your account every week, that's pretty fun. And it should be. So plus you get a 161-page downloadable ebook, complete with graphs, charts, pictures, and everything you need to start trading profitably and stay that way. And you get a 10-chapter video series. Some people prefer videos. I try and keep the videos concise, keep them information packed, keep them exciting. I don't like to be bored. I don't think you like to be bored. So these video chapters are really fascinating. They're really fun. And they all have stop and start controls. So you can go back if you didn't get an idea. You can listen to it again a couple of times. So you can see and hear exactly what to do to start generating income. There's some real powerful do's and don'ts here that I've kind of learned the hard way. And I want you to take the easy path and the big shortcut. And you can do it with just a little bit of education. You'll also gain access to all of our archived webinars and video tutorials for life, so you can discover new strategies and ways to improve your returns and limit your risk. And you'll have access to this website forever. It's not like a dusty old book that sits on your shelf and is static. I add things to it as we make new discoveries. You'll get more and you'll learn more. And for one very low price, you get access to this for life. And so the one thing that there is a subscription for is the Tuesday night update. And with the package I put together for you today, you're going to get your first month free. And with the subscription, you get 2 new high probability trades every week. And I'll show you exactly where to sell your spreads and exactly how to sell them for the possibility of maximum gains with minimum risk. This is really fun. It takes me about 9 hours to write it. I do a tremendous amount of research. You get a really good idea of the things that affect the market, where the overall market's headed, what our best bet is, what sectors to go into. And then I give you these 2 trades with a lot of detail so you know the whys. What's really driving this individual stock? What's going on? You saw a little bit of commentary on the charts, but there's a lot more. And I think you'll find it fascinating. In addition, we all know the best way to learn is through one-on-one instruction. So included in this package is a free one-on-one orientation with one of my fantastic, intelligent gals that help me out so much. And they're going to really show you around the website. They're going to show you how to take advantage of your subscription. I hate it when you buy something and then the minute you make the purchase, they drop you like a hot potato and they move on to the next person. I don't want to do that. I know that if we can make money together, you're going to be with me for a long time. And that's worth a lot more to me than trying to get the next subscriber. So I want you to get some individualized attention from one of my really friendly, really smart gals. And they're going to show you around and they're going to show you how to take maximum advantage of your subscription and your education. And then this is the big deal, which just blows me away. Nobody else does this. This is Alicia. I live in a college town. She graduated from the university here in finance. She's a huge kick in the pants. I absolutely love her. She's turned into like part of the family. And she is brilliant. She has a brilliant financial mind. She is so darn good with numbers. Whenever I'm thinking about a new option strategy, she's the one I go to. She's our personal coach. You're going to absolutely love her. And I'm going to give you one 45-minute personal coaching session with Alicia, tailor-made to your learning pace, your skill level. It's designed to increase your knowledge, your confidence, and your profitability. So we have, you're going to get this one for free with the package. We have, if you want to continue with Alicia, and I think you're going to want to, we have 3-session coaching packages and we have 8-session coaching packages. And we've had people that have gotten as many as 6, 8-session coaching packages back to back. And is that because they were having a hard time understanding what a call or a put is? No. What Alicia's really good at is making people money. And obviously, we can't give individual investment advice. We're not licensed for that. But she can, she sits there and she can see your screen on your computer. These are what these sessions are like. And she can show you where to look and where to find the best probabilities and what the great setups are. The reason people get so many coaching sessions with Alicia is she makes people money. And she just does this consistently. Plus, she has a kick in the rear end personality. And I think you're going to absolutely love her. And even if you just get your free session and go beyond that, I think you're going to absolutely love it. And you're going to see the value of it. I think you're going to want more. So we're going to throw that in. And then you're also going to get the greatest option strategy on earth. This is sort of my modestly named greatest option strategy on earth. And this is something that we absolutely love. When we find a stock in a really strong trend, we made a fortune last year with gold, doing this with some really key gold plays. And this gives you an incredible amount of cash flow. It gives you huge capital appreciation, and you get kind of the best of both worlds. This is the strategy that got me retired back in the 1990s, in the big bull run in the dot-com era. And we used to sell it all by itself, and it had its own subscription. I'm incorporating all of that. I'm rolling it all in. You're going to get this complete package. And occasionally when the setup's right, you're also going to be included in whatever actual play we do. And we've just made a fortune on these things. It's a really, really, really cool strategy. So I also told you at the very beginning in this presentation, you're going to see the strategy that's worked the absolute best over the past 20 years. You just saw that, selling credit spreads. But the strategy that is the best for the future is truly automated. So we've been working on something for over a year now. We started, and that's automating everything that you've seen here, this credit spread strategy, where you actually don't do anything. I mean, you just give us trading permission. We actually execute the trades in your account, and you just benefit. You don't have to ever click a mouse. And this is it's incredible. We started trading it with real money in January, and we've been doing that. And we found an interesting anomaly. So when the war broke out in Iran, all of the skews started getting really weird as far as what kind of credits you could get in relation to the actual volatility that was going on. So what we found is the credits started being reduced, but the volatility was actually increased. So we weren't getting paid for our risk. And we found that the credit spreads weren't working as well anymore. But what we found is when we switched to debit spread in this one unique situation, you could make far more money in a far shorter amount of time with a higher degree of probability than doing the credit spreads. So here's what happens is we end up selling credit spreads with this automated strategy about 80% of the time. But when the conditions are right, we buy debit spreads. And that's when we can really make out like bandits. We can make a fortune. And once again, this is all automated. This is not available yet, but here's the catch and here's the rub. So we do this on the SPX because the SPX has so much liquidity, but we do it on individual strike prices. So even though the SPX has a ton of liquidity, individual strike prices do not. So we have to limit the number of subscribers, because if we do too many contracts, we're actually going to start moving the price of those options ourselves, and we don't want to do that. So the people that get involved now, that just get our regular subscription and the educational package and everything else, are going to be the first ones and perhaps the only ones that get to do our automated strategy, which we're going to roll out later this summer. So I want you to come on board. I want you to learn all the theory. I want you to take advantage of the education and actually start making money with this strategy. So when it starts happening automatically in your account, you'll know what's going on. And by the way, we don't have any access to your account. We can't get in there. We can't see what your balance is. We can't do anything. All you're doing is accepting signals from our pilot account. We actually make the trades automatically with our algorithm in the pilot account, and then those signals are sent to your account. So we have no access to your account. It's going to be a really slick, amazing system. And right now we use Thinkorswim to trade because they're the best for trading on your own. But for trading this automated strategy, we're going to be using Interactive Brokers. And I really hope you come on board so you can take advantage of it. So I want you to prove to yourself how well this works and have a chance to see your account build. Even if you have some other favorite speculative ways of trading, keep doing those. But do those with maybe 20% of your trading capital. Put 80% of your trading capital towards a strategy that gives you an 80% chance of winning. So I'm not trying to get you to not do what you're doing right now if you have something that you really love, but I would say allocate a pretty good chunk of your trading account or your trading capital to something that really has a great chance of making you money. So to get everything that we've talked about and to enjoy trading with all the advantages on your side, go to thewinningsecret.com. I put together a really special price for this package. It includes absolutely everything. The best package we've ever put together at probably the best price you'll ever see. I think you're going to be kind of amazed when you go there and check it out. And I don't know if, John, you want to put the link in the chat, if you can do that. We only have a couple of minutes left, so I'm going to leave this to Sebastian and John to see if we have time for questions. If we don't, I really want to thank you for being here and really appreciate having a chance to share with you today. I hope we have a chance to make some money together.
Yeah, we put the link to your sales page in the chat box on the right. That'll take you to the dedicated sales page, which is only available today. And we have a couple minutes for questions. So if anybody
Thank you,
wants
John. I
to
appreciate that.
ask any questions, just enter them in the chat box and fire away.
Yeah, okay, we have Peter's offer here. And what is the suggested capital for this service to be economical? And I would say that you can do it for as little as 2,000, but you'd be kind of limited. You might not be, you'd only be able to do maybe one contract. So what we suggest is $5,000 in capital, and that's also a good starting amount for our new automated trading program. And when is the automatic trading going to start? And we're targeting late July or August. And we really, I mean, before I roll this out to my people, I really want to make sure it's bulletproof. We've done incredibly well up to now, but you have to realize that when it's my money that we're trading with, that's one thing. But when it's your money, we feel a pretty big obligation. So is 20 to 25,000 good? Yes, it is. I want to mention that on the automated trading program, we're going to have two levels of participation. You can start with two contracts, and with two contracts, a $5,000 account's fine. And then we're going to have a 10 contract level subscription. And if you got 20 to 25,000, that'll work beautifully for that. And Sebastian says, passive income from trading sounds like a paradox. Trading usually requires active decisions. What are the decisions your system requires? I hate to take away the fun of trading. I know for a lot of people, trading is kind of recreational, and it is a fun game. It's like playing chess with the market, and winning feels really, really good. But over the years, so many people have said, listen, this sounds kind of complicated. Can you just do it for me? And that's exactly what the automated trading program is going to do. I mean, you can check your account if you want, but you really never have to make a trading decision. And I actually don't either. We programmed all this into the algorithm, and we're going to use AI to actually improve it over time. But right now, it works so incredibly good. I wish I could actually tell you the returns that we're getting. I don't think anybody here would believe me. So I think it's really better to actually have it shown to you in your account. I think the proof is in the pudding. And I love this comment. I love it. I'm an engineer. I love engineers, man. They live in the real world, not the I wish it was something world,
Peter,
They
I have to confess, we had Chat GPT listen to your presentation, and
Hmm.
some of these questions coming in are from Chat GPT.
Oh, no kidding.
Yeah, it's
Wow.
artificial intelligence analyzing your presentation.
Well, that is just absolutely fascinating. And then it's acting like a person. So this is going to be really interesting.
You can't
Um,
tell the difference between a human and AI.
right.
In other
Um,
words, we just passed the Turing test.
right, exactly. Um, there's a friend of mine came and he's a little older and he's getting all of these. He got on a dating website. He got tired of being alone. And the poor guy, he brought this stuff to us and said, is this stuff for real? And Alicia, who's a lot smarter than I am, she's the one that's going to be your coach. She just immediately looked at it and said, this isn't real. And she kind of had to break his heart a little bit, but that's kind of the problem with AI and artificial intelligence is there's a lot of false stuff out there. Um,
Yeah, no
and
kidding. I signed up for one of these things and like 10 years ago, and in the when you sign up in the fine print, you release rights to your profile forever.
uh-oh,
So they keep sending your profile out to people long after you're dead. So a
wow,
lot of these hotties you see on the dating sites are in cemeteries.
oh my gosh, that's downright ghoulish.
Yeah, how about alarming?
Gosh, we're living in a strange and brave new world here. It's going to be really interesting to see how all this turns out. Yun N asks, is the 397 price for the year? No, that's a one-time price. You pay that one time and you have access to the package forever. There is an ongoing fee of $99 a month for the subscription, and I hope you never have to pay for that. I hope the market always pays for that for you. And that's why we give you the first month free, so you can actually get some trades in without having to spend anything. So I'm actually delighted to share all this with you. If there's any more questions, I'm happy to answer them, but I think we're kind of out of time.
Yeah, Peter, where are you broadcasting from today?
I live in the beautiful town of Ashland, Oregon, just north of the Siskiyou Range and north of the Oregon-California border, and it's absolutely gorgeous weather today.
And home of the Shakespeare Festival.
You are a sophisticated cultural individual, I can tell right now.
You think? It's also the home of Bigfoot. So let me shatter your assumptions right there.
Right, exactly. Exactly.
Okay, we got to move on to the next speaker. Great having you on. Thank you very much. And again,
Thank you.
take advantage of Peter's offer here. Just click in the chat box on the right, and that'll take you to the sales page.